Hey, welcome trading family. All right, we have lots of things happening in this market, lots of things unexpected, I'm afraid, to many of the traders out there. Hopefully, not those of you who follow me. I'm going to kind of go through this list a little bit. Hang on one second. I got to turn my music down in the background because it's a little distracting. All right, better. All right, so in this video, guys, I'm going to go over the Wyckoff distribution pattern that I drew about 3 weeks ago. And we're going to talk about some bearish signals that we should have all been tracking regarding Bitcoin. We are actually almost at my first target on Bitcoin. I called for 72 to 76,000 on this latest drop, but I put a question mark there because it is possible that we go lower, and I'm going to talk about that in this video and why I think that's a possibility. We're going to look at the SPY. I got a sell signal from my indicator on the SPY. First time in many moons, and I take it seriously when I get a sell signal from my indicator because on high market cap, high volume traded assets, it's almost always right, and especially when we're talking the SPY. So we'll discuss that. We'll discuss the Mag 7 and two of my first shorts. I'm well in the profit on my shorts. I don't like shorting, but if I'm going to prove that this indicator works, I've got to do it when it says to sell. And fortunately, I pulled the trigger on both Tesla, Palantir. Both of them are well in the profit, double digits. I think Palantir was almost at 20% last time I looked, and Tesla is about 10. More to come on that. We'll talk about that in this video as well. And I'm going to discuss a little bit of why I closed my crypto portfolio. I discussed that in a post. I'll probably just talk about that real quick in this video as well. This video is going to be a little bit more lengthy, so for my TradingView people that are watching this, if I get cut off at the 20-minute mark, hopefully you guys know where to follow me. I can't say in this video because house rules, and I've been censored by TradingView before for posting or saying any links. But hopefully you all know where to find me. Let's get started. All right, I screwed up. I started the video and realized I was on mute, talking to nobody. That's always fun. Now I have to try to repeat and remember what I was talking about. All right. I think what I did is started with 4 bearish indicators that my followers know I have been talking about for quite some time. Let's move this out of the way. Use my arrow here. The first one is this pi cycle top trend line. All right, where does this come from? I'm going to zoom out to the weekly and show you. I'm going to also go in here and hide Mr. Wyckoff, just making sure I'm recording again. Paranoid. Just so that we can clear some of that extra. All right, so this pi cycle top is a trend line that I discovered some time ago, and I've been tracking very closely, mostly out of interest until recently, realizing that it is definitely something to pay attention to. Every cycle top, starting in December 2017, where this trend line began, and going to the next time the pi cycle top indicator gave us a sell, which was actually this first top here in April of 2021. All right, so if you connect from 2017 to 2021 and then follow this up, now I'm going to go ahead and zoom back into the daily so you can see this. Recently, where did my arrow go? There it is. We hit this not once, not twice, but actually 3 times before failing and falling. I thought we actually hit it 4 times, but maybe I'm wrong about that. And we're on the daily, yes. So, okay. 3 times recently on the daily. And I knew this third time, if we couldn't break through, we were in trouble. And you can see following the hit on that trend line, we just absolutely collapsed. We came down to this second trend line I want to talk about, which actually forms a megaphone pattern, a bearish signal. But disregarding that megaphone pattern, let's take a look at this trend line. I have been tracking this as well as support. And I knew if we broke this, it would even be more trouble. First, I'm trying to remember how I ordered this in the talking that I did to nobody before. I did actually have this Wyckoff pattern drawn, and those of you who have been following me know all about this. All right, this is my third post or video on the topic. I drew this Wyckoff pattern out, drew the channel, the distribution channel up here, and we have a spring right here. That's the final stage of distribution channel in the Wyckoff market cycle. Not that I'm an expert in this, but it looked very familiar to something I've seen before. And that was the last bull run cycle. We had a Wyckoff distribution. You could also say it was a head and shoulders pattern. You know, I talked about that years ago in my videos. Either way, the pattern is bearish and usually is fulfilled. So I knew if we first of all dropped from this distribution channel, which we did here in October, it was turning even more bearish for Bitcoin. And then furthermore, again, back to this white trend line, if we drop below that, that is bearish indicator number 3. Finally, see this orange trend line here? That is a 350-day moving average. Now, a lot of people don't keep this on their charts. I do. And here's the reason. I'm going to zoom back out again. Please ignore all the noise up here while I just review what is important about the 350-day moving average. It's actually pretty simple, guys. Anytime we're above this 350-day moving average, it's usually a bull cycle. Anytime we're below it, it's usually a bear cycle. And that was the case even in the last bull run. Once we broke above this 350-day moving average, the bull run was on. Once we broke below it, again, it was a bear market. And then over here in, when was that? April of 23, March of 23. We broke back above the 350-day moving average and have been above it ever since. All right. 2.5 years above that 350-day moving average. That is a long bull cycle, guys. So this is not going to be popular, but we have been in a bull run for 2.5 years. I realize, guys, that the altcoin market has not cooperated as we had hoped it would. but I had always warned that the altcoin bull run was not going to be the same as it was in the past. There's just too much out there, guys. Think about it. The total crypto cap, like all the crypto coins, including Bitcoin, is still less than some of the largest stocks out there. Nvidia, Amazon at times, Microsoft. I don't know if it's bigger than Microsoft, but Amazon and Nvidia are certainly bigger than the total market cap. All right, so then when you get past Bitcoin and past Ethereum and past the top 10 big cap alts, you just have hundreds of thousands of these little shit coins and meme coins. And really, guys, you're gambling at that point. And I do admit I love to gamble at times, especially when it comes to meme coins and shit coins. And you've seen me do that. But we've got to be honest with ourselves. That's really all it is. You're just trying to pick the one that's going to pop. And maybe you're good at that. Maybe that's what you want to do. Fine. I've learned with my indicator, which I'm going to go ahead and put back up here on the chart, that I can't use this indicator on the smaller cap, small volume, meme coins and shit coins. I've got to keep it real and keep focusing on these larger cap cryptos. And the one that it does work extremely well with is Bitcoin. As well as all of my stocks. And we'll go over that in just a second as well. I don't know if I got cut off in the last video when I wasn't recording myself, but TradingView people, this is going to be a little bit longer. I'm just I have no notes, and I'm kind of just going through all the points. I think of them as I think of what I want to say. So if I do get cut off, hopefully you know where to find me. I can't say in the video because of house rules, and I've gotten censored on TradingView before for, explicitly stating links. So I'm not going to do that here, but you guys are smart enough to know where to find me. So we've got a sell signal from my indicator at the top, precisely when we hit that pie top cycle, precisely when this spring from Wyckoff market cycle, the pattern appeared, and I knew that we were in some trouble. That was confirmation number 5, really, of this bearish market cycle beginning. All right, so I have a target down here of between 72 and 76,000, and I apologize if I can't remember. I reviewed it in this video before I got cut off, or before I went mute, but let's just talk about it again. It comes from over here. Really, you can go all the way back to the previous market cycle tops, and you can see we almost hit it back then. I'm going to disappear my indicator again, get my arrow. All right. Right here, we almost hit it on that second top. And then over here, we hit it 1, 2, 3, 4, 5, like countless times. And then when we finally broke through, we broke through big. Again, what do I always say when we do that in a major area of resistance? That is indicating to us this is important, very important area of resistance or support, depending on what side. Now, it's going to act as support for us because we are above it. And you can see, we got down near that 72 to 76,000 target on Bitcoin, and already the market's going back up. I still think we're going to come into that before we really have a a significant bounce, but we could also go lower. And I know this is not going to be popular, but Michael Saylor has a lot of Bitcoin. I'm going to pause the video just to get my stats right on this. 1 second, folks. All right, so MicroStrategy owns about 650,000 Bitcoin. Currently, at the time of this video, worth about $33 billion. Now, their average buy-in, I'm going off of memory on this last stat because I didn't look this up, from memory is about 76,000. That is exactly where target 1 is. Let's say that Bitcoin continues to drop there. Michael Saylor will be in serious trouble. In fact, there's already rumors about him being removed from the NASDAQ to the NASDAQ 100 or something like that. And that's going to be, serious for MicroStrategy and Bitcoin, by the way. So I won't say anything more on that because I'm not trying to create fear and panic here. I just want you to know that if the bears somehow succeeded at taking us below this target number 1, there would be a target number 2. And I'm thinking somewhere, this is going to sound crazy to you guys, but right around 46,000. I would say 46,000 would be a good second target. If you're inclined to believe this is the beginning of another, short bear market, I still think we're going to have, some pops and some runs coming before the end of 2026. But you could start DCA'ing in here at target number 1 if you're more optimistic. If you're less optimistic, maybe hold, see what happens. I can almost guarantee we're going to bounce here, though. So don't FOMO in off of the bounce thinking that it's all over. We need confirmation first, all right? I don't think this is just going to be a quick dip. I think it's going to be a couple months here that we're going to be in a down to sideways-ish market. And there's going to be a lot of volatility. All right. And this is going to spill over from our stock markets. So what we've been tracking is the SPY. My followers know this. And I do that because everything that happens in the stock market spills over, and SPY is just what the S&P 500 is just what we've been tracking. I want to show you something, guys. I'm going to put my indicator up here again. Look at this. And I'm telling you, on the SPY, I can go back and prove this, but every time we get a signal within this liquidity block, whether it's buy inside of a green liquidity block or sell inside of a red liquidity block, get an arrow out here again so you guys can see what I'm talking about. All right, buy inside of a green liquidity block, sell inside of a red liquidity block. It is almost always right. And in fact, I'd have to go back for many years to prove where it ends up being wrong. And it's always at least a 10% drop. In this case, this last drop here, this was 20. All right, so I went back a few years, and I won't bore you on this video, but we had a drop of 10%, then 6%, then 10%, then 6%. Over here is 20%. If that pattern continues, I would say we drop 12% from the top. All right, let's just, out of curiosity, I want to see what 12% from that top is. And remember, guys, this was my third and final target. We've nailed every target since. Let me go ahead and put up my targets here, and then I'm going to zoom out. All right, just so you can see. All right, we nailed every target from target number 1. Remember, we hit that and I sold, and then I bought back here on this support. And these trades were not public. This is just my personal portfolio. We hit target number 2. This one I should have sold, but I didn't because this was the 20% drop. And I just held through this one because I have target 3 draw up here, and I knew we were going to come back up to target number 3. However, if I would have sold here at target number 2, that's a 20% gain I could have had in my portfolio just by holding cash. 40% if I would have gone short. Now, I can't personally go short on the portfolio that I'm talking about, or don't necessarily want to go short, but that's a 40% difference, significant difference. All right, and then here we are at my third and final target number 3. All right, now I am going to go ahead and erase my targets again. Whoops, did not mean to do that. Hang on one second, guys. Shoot, why is my pause not working? 1 second. All right, I accidentally deleted my targets rather than just hiding them. So target number 3, we have a sell at, and that was my third and final target. Some people say this blow off top will go even higher. All right, it may. I'm all in cash right now, and I may go back into the market and just touch it for a little bit. But back to what I was going to do here. I want to see, since this was a 20% drop in our last one, remember I said 10, 6, 10, 6, 20. I'm anticipating this to be a 12% drop from the top. And if we take it down 12%, look at that, guys. We come almost to that 350-day moving average. What did I say about the 350-day moving average? All right. That is a sign of bull or bear. Now, over here, we did drop quickly below the 350-day moving average. However, if we turn this into a weekly time frame, it was not confirmed. That drop was really not confirmed on the weekly. Okay, we can't see the 350-day moving average on the weekly. Where was that? Okay, so that price is 530. I'm just thinking out loud here. And so we really didn't have a confirmation on the weekly below that 350-day moving average would be right about in this area. All right, so these weekly candles did not confirm that drop below the 350-day moving average. And I look to the weekly as, a big confirmation. So back again. I know I'm jumping around a lot, guys, but I just want to cover everything in this video, and hopefully it's of value to you. Watch this 350-day moving average. I don't think we're going to drop below it. So the analysts that call for a higher target of, my final third and final target was 670 to 700. Those that are calling for a higher top could be correct. I really do think we'll bounce off this 350-day moving average. If not that, then this pink trend line is very significant as well. We'll bounce somewhere down in this area. All right, so that's kind of what I'm waiting for before I enter back into the market, is this area. Then I would enter back in and play a bounce, but really I'm not of the persuasion that we'll go higher than 700 like some analysts are. Another thing I want to show you, and I'm going to go ahead and take off my indicator again. I'm going to go ahead and delete this arrow. I'm going to jump over here to the monthly on the SPY. And since 2009, I keep talking about 2009 because that really is the start of this latest secular bull run. I want to show you a trend line. I'm going to draw this from, let's see, it starts in February of 2009. Look at this, guys. this we've been above since 2009. We could actually drop all the way down to around 300. Half right now, 330. We could drop to 330 from where we're currently at. Literally a 50% drop and still be in a bull market. I want you to remember that when shit hits the fan. All right? It's not as dire as what you may think it is. This trend line is important. This is on the monthly. It comes from 2009. Again, dropping all the way, literally a 50% drop from our current valuation on the SPY and still be in a bull market. All right? So keep that trend line in mind. All that said, I'm just anticipating at least a further local drop here on the stock market, which will definitely carry over to crypto. I realized today the market's back up. The SPY is back up almost 2%. Bitcoin is still struggling, as it should be. We're going to jump over to the Magnificent 7 and take a look, because those are our market leaders, right? And they are all in the green, except for Microsoft. All right. But if we take a look at each one, pull my indicator back up. I've got a sell. The sell is the last signal on most of these guys. Sell on Amazon, sell on Apple, sell on Google, sell on Meta. Oh, no, the last one was buy here. All right. So Meta may be oversold at this point and may be due for a little bit of a pop again. That's the only buy signal so far. Sell definitely on Microsoft, because we have a sell signal inside of a liquidity block. So that's definitely significant and dropped from that liquidity block. NVIDIA, Michael Burry short. The last signal was a sell inside of a liquidity block. So he was right on that one. All right, Tesla, which I shorted. All right, we had a sell signal inside a massive liquidity block. I'm still short on this. However, we got a major trend line here, this red trend line, that is going to act as support, and it has been acting as support. So until we break through that, we will not get through my final target. All right, finally, I shouldn't say finally, because I don't know if it's going to be final or not. I also want to look at Palantir. It's another one of my shorts. Remember, I didn't go short. This is the first time I've gone short using this signal. All right. I went short on Palantir. We almost reached our final target, almost 25% on this short. All right. So my indicator is proving good, both on the longs and the shorts. And since I've implemented it, we have done very, very well. My portfolio is public. All my trades are public. You guys know when I make wins, when I make losses. I don't just pump my wins. I show my losses as well. And these are my first two shorts, Tesla and Palantir. Could have gone short on NVIDIA as well. However, I didn't like the odds on that one as much, because the PE ratio was a little bit like 50 or something. Tesla is some crazy 200. It was 300 something at the time I shorted. Palantir was all the way up at 666, the mark of the beast. So I took that short easily. Both of these are well on double-digit profits for me. Okay, I'm just trying to think if there's anything else I want to say. Do I even want to cover anything? I might as well take a look at Bitcoin dominance, just for you altcoin traders, because that's where a lot of my followers came from. All right, we got a sell signal on the Bitcoin dominance. That's a good sign for altcoins, and you can see dominance continues to drop, meaning that Bitcoin at this point is currently weaker than altcoins. Altcoins are holding the line in comparison to Bitcoin. All right, so if you have a solid altcoin, Zcash comes to mind, or Link, or any of the big Avalanche, any of the big altcoins that will do well, you're likely to do better holding those than Bitcoin at this point. Avalanche, Bitcoin Cash, Dash, Decred, some of those privacy coins are especially attractive at this point, with national identity being rolled out, and people are jumping to privacy coins. Okay, so that's Bitcoin dominance. The dollar. All right, so last signal we got on the dollar was this sell signal. However, I'm not so sure if we break, if the body of this candle here breaks above our pivot high today or next week, this sell signal might be eradicated, and we could see this turn into a buy liquidity block. All right. So the dollar has been holding its own. It is above the 200-day moving average right now. That doesn't mean anything until we can confirm that on the weekly, but it is especially strong compared to all the money being printed. And I say all the money being printed, I'm talking about paying for government, almost 2 million government workers for a month off of work. You paid for their vacations, taxpayers. You gotta get that money from somewhere, right? So the Fed prints, and the Fed borrows it from the banks, from the Federal Reserve, the private bank. All right, big private bank, centralized bank. Everybody thinks that's a federal bank. No, that's a private bank, and the Fed is their slave. All right, we borrow. Our government borrows money from that bank, and we are in debt to them. All right. So whenever we do something stupid like shut down the government for 40 days and pay for 2 million federal workers to have a vacation, we have to print that money to pay for it. All right. That weakens the dollar. When Donald Trump comes out and says, I'm going to give every man, woman, and child $2,000 a $2,000 check, where's he going to get that money? He has to borrow it from the Fed. All right. That's all money that is going to decrease the buying power of the dollar. So that's why it's surprising the dollar has stayed in this channel. And I've talked about this channel. I'm going to zoom back out here. Again, we've been in this channel also since 2009. The dollar has stayed strong, so the stock market has done well. Actually, since 2008, we've been in this channel. Once we break it, though, look out below. Look out below. And if we break it, the hardship, the depression that's going to follow is not something we're going to be used to. It's going to be a hyperinflationary depression. What that means is that the dollar will incur less and less buying power, making it harder and harder for average consumers to buy goods and services. And that difficulty is going to collapse our economy to some degree. To what degree, I'm not going to speculate at this point. But it's important to keep that in mind. I do believe that the next depression is not going to be depression in terms of stocks going down, but stocks going up and the dollar going down. That's the kind of depression we're looking at. Okay, enough said about the dollar. One more jump here. I'm 31 minutes in. Again, longer video. Let's take a look at gold. When stocks fall, when there's uncertainty, when we don't have job numbers, when we're not sure the Fed is going to decrease rates or increase rates, when we're not sure that Donald Trump is not going to come out with a new tariff, injunction, tax, whatever, all this uncertainty, people would rather just go to something that they know will hold value. That is true of gold, and not only has it been holding value, it has been increasing. I think it will continue to do so. I see a top on gold at around 10 grand per ounce. Silver is following, baby gold is following in gold's footprints, but lagging a little bit behind, as well as all the other precious metals. So keep an eye on silver and gold. That's where people go when there's uncertainty. And we can see the VIX here is a little bit elevated, breaking out of a long time triangle, indicating there's more volatility to come. All right, and this volatility, this uncertainty will definitely weigh down the markets. So we've got a little bit of a bounce today on the markets, indicated by the SPY here. But again, my indicator has told us we're going to sell, and it's always at least 6 to 10% in the past. Because of this last one was 20%, I'm going to double that 6 to 10% and say it's going to be 12 to 20% drop from the top. And that puts us again at either that 350-day moving average, which is around 12%, it says 14 there, or 20% would be close to this pink trend line. That area is where I'm targeting, and I do believe so far I've been right on point, guys. I don't have any reason to believe I'm wrong about this one either. Again, that'll carry over to Bitcoin, which is currently at 84,000. Bitcoin will come down and at least hit that target number 1. If Michael Saylor and MicroStrategy can hold out, that will be the low. If they can't, domino effect, and we're going to see all sorts of new selling incurred. It could drop us down, to be honest, as low as 40,000. I know a lot of people who are watching this video are going to laugh at that. That's okay. I've been laughed at before. But just keep this in your, if you're going to laugh at this video, just keep a link to this video and watch it again in about a year and see if you have a right to laugh or not. All right. Enough said, folks. I can't get us back to my intro screen. So hopefully this is a little longer video. Me rambling on and on about whatever comes to my head. But this is the data I'm looking at. If you have anything that counters this, I appreciate knowing about it. I like to look at other perspectives. I'm currently bearish biased, if you can't tell. But I don't mind being persuaded another way if there's convincing evidence that would point me that way. Till the next video, peace, y'all.